Hi there, this is Alvin from Dr. Wealth, and welcome to another week of market trends update as well as some momentum trades. So before we begin, the usual disclaimer, pause and read it if you need to, and let's go through the trade ideas from the last 2 weeks. And all these stocks were selected based on high momentum. And the first week we did better, right? After 2 weeks of performances, we have Eagle Bulk that went up 8%, and we have another two that went up 4%. Just take note that the last three over here are mentioned last week, right? And then the first three are actually mentioned 2 weeks ago. So the first three have 2 weeks of performance, whereas the last three only have 1 week of performance. So last week we didn't do as well. We have two stocks that actually went down 6% based on the ones that were mentioned. Okay, but it's still early. Momentum is not about just a 1-2 day or even intraday kind of movement, and the momentum time frame that I'm looking at is weeks to months. So it needs some time for the momentum to pan out if indeed the momentum is still strong. Right, so far overall, if we still take a look at the past 2 weeks, if you equally weight the stocks, you actually come out with an overall gain. Okay, so that is how the momentum has been working so far. And the next thing that we want to go through is the overall market condition, right? So we do see a slight rebound in the last 1 week, and S&P 500, this is the S&P 500 ETF chart. You can see that there were very strong green bars, especially the last 3 days of the last 3 trading days in the US, and the rebound seems to be giving some respite to investor. Finally, broken down the downtrending trend for now. Okay, will it go down further or will it rebound from here? Personally, I do think that it is still too early to call this a rebound, because the moving average, this red line is the 200-day moving average. The price is still firmly below, and it's still a very big distance. For it to really go back to its bullish long-term trend, it needs to at least cross the 200-day moving average. So this is actually too early. The worst is that when the moving average starts to come down, and at the same time this price start to hit the moving average, and then it has a price rejection and there's a reversal that happened, that means the bear is still in control, and this is more likely a dead cat bounce than anything, right? But basically this is too early to tell. I don't think one should just bet on a very big rebound that's coming from here. Same thing as with the QQQ, which tracks the NASDAQ, right? You can see this is clearer. It couldn't break the 200-day moving average previously around April, and then it went all the way down. That is what I mean, right? So if let's say this bounce went up to close to the moving average again, and if it failed to break, yet it went down like almost like bouncing the ball off a wall, then you will see the downtrend resume again. So even for QQQ, the tech stocks, it's too early, right? In fact, it's even worse than S&P 500, because at least S&P 500, the maximum drop from the peak to trough so far was about 21%, whereas for NASDAQ, it has already broke down to about 31% from the peak to the trough. So NASDAQ or tech stocks are generally weaker. Okay, so it's too early to tell. And let's look at the bond market. So TLT, this is a long-term US bond. We all know that the interest rate have been rising, and that's not good for bond price, because bond price move opposite to the interest rate movement. So as interest rate goes up, you can see that the bond price have been falling. And a long-term bond like a 20-year bond usually will have a more price movement as compared to a shorter bond duration like 5-year or 10-year. And likewise, the rebound that we see is very minimal. It is still very far away from the moving average. The bearish trend has not been broken at this point in time. And how about gold, right? As an alternative asset, as we can see, gold has actually, during the war between Russia and Ukraine, gold price actually rallied quite a lot. And yet, but it didn't sustain itself. It just went back to where it were just before the war. And then now there is a little bit of that rebound from this long-term trend that I drawn, and at least the price is still above the 200-day moving average. So which means that the bullish trend is not over yet, just that the momentum isn't very strong, because when I measure the exponential regression, it is very minor, 0.03%. It's negligible. So it is also not a time to really going big on gold, right, based on momentum consideration. Now let's look at the other sectors. The first one would be the material sector, right? It has been range bound for quite a while. Materials prices have been going up due to inflation, but somehow the material stock related stocks are not doing that well. The momentum is minimal, right? Because it's this range bound. Okay, but there's some bright spark. At least it went above. But there were instances, quite a number of new instances that went up and came down, went up and came down, right? So it needs to probably break some highs before we even say that the material sector is on a bullish trend. The next one is communication services. This is bad, right? This is worse than Nasdaq. From the peak to trough is down 34%, and the rebound is also very minimal, right? It's just going with the market trend. So communication services is not an area, right? Because there are some tech stocks that are classified under this. If I'm not wrong, I think Google or Alphabet is under this category. So that probably dragged down the sector. And the next one, energy sector. Wow, you can see it's breaking new high. Just as you thought that oil and gas prices have been going up, the war has been going on for quite a while already. People are sick and tired of listening to oil price going up, but yet it is still going up, unfortunately, and it's still breaking new highs, right? So this is the single most bullish sector at this moment, and there's still no signs of the bull resting. Right, so that is where the momentum is concentrated on, right? A lot of commodities, especially the energy side. Next one, financials, and we can see that the financials didn't do that badly, right? But it is also on a downtrend, okay? Because the price is still firmly below the moving average. A new low has been made. A lot of good news is required before we can call the financials, the banks, and the fund houses that they are on a bullish mode. In terms of industrial, right, likewise, you can see similar pattern is also down. Okay, so far we only see energy is the very strong sector, right? The rest are pretty much similar. So these consumer staples, there's some strength, right, trying to hold above the 200-day, but you can see there is a few times that it tested, actually 2 times. Once it tested during March, okay, it rebounded, but then it went down again, okay, a deeper drawdown. Right, I think this was caused by a lot of the supermarket stocks like Walmart, Costco, Target. They reported bad results and the share price was sold down. So that pulled down the stocks quite a fair bit. But then we saw some rally over here and it went back up to 200-day moving average. Okay, so far the bullish trend is still considered intact, but again the momentum is very weak. Okay, as you can see, it failed to continue to break new highs, and it is even struggling to stay above the 200-day moving average. So this is very precarious at this point in time. I don't think likewise the momentum trades are going to come from here. Utilities, this is next most bullish sector based on what we have seen so far, and it has stayed above the 200-day moving average firmly, right? It's trying to test a new high. If it can break above this new high, then the strength or the momentum is strong. Right, so this is the second most or the second highest momentum sector that we have looked so far. And healthcare, okay, struggling, range bound, okay, but not as bad as a lot of other sectors, right? But as it's not strong either. Okay, so this is like no man's land. Momentum wise, we won't touch this. Then the last sector that we are looking at would be this consumer discretionary, right? You can see it's less resilient than consumer staples, which is expected because during market bearishness or economic recession looming or inflationary period, people will still spend on staples but less on discretionary kind of products, right? Usually the luxury ones. So you can see this is has a deeper correction as compared to the staples. Okay, so far we only see energy and utilities, right? But of course, the highest momentum will be energy. And I also wanted to look at some of the grains, right? Agriculture, this is corn, right? Still staying way above. Momentum is still good. Wheat is still going up. Soybean, right? That shows you that the impact of the Russia-Ukraine war as a big agricultural exporting countries, the supply has not been remedied, right? The gap has not been remedied by other countries. Okay, so this is still an ongoing problem, and that's where some momentum plays can be happening as well, right? And I thought that, given the recent chicken saga, chicken prices are shooting up through the roof, Malaysia has cut off the supply to Singapore. I thought that, maybe chicken stocks or chicken related stocks could do well. And it's the same situation in the US, right? Chicken price is like a 20-year high. And I went to look at some of them, like Tyson. Yes, the price is above 200-day moving average, but the momentum is not there. Okay, so I thought that there could be some opportunity. Unfortunately, there isn't. Hormel Foods is another one, very similar, right? There's not much momentum to talk about. And too bad, right? The chicken prices is not reflected on the chicken stocks, or the poultry stocks. And looking at China, right? So I'll be looking at this ticker 2801. It is a MSCI China ETF. Okay, so because China recent 2 weeks has been rebounding, right, from the low, but the price is still firmly below the 200-day moving average. In fact, it's been like that for a long time. You see, I keep drawing a lot of resistance lines and or support lines just keep breaking and breaking and breaking. But at least there's some sign of like bottoming, right? Because there is a range bound kind of movement in the share price. And if let's say it breaks the 100-day moving average, this blue line is 100-day, and then eventually breaks the 200-day, we might see a reversal. But at this point in time, it's still early. Similar to Alibaba, right? After a very long drawdown, very deep drawdown, it finally sees some rebound. The latest results have been encouraging, right? Even though it's not the most fantastic, but it's encouraging. Yet the share price is not firmly above the 200-day moving average. It's still too early to call a rebound in China stocks, especially Alibaba. And let's come to the 3 ideas that I want to share with you for this week. One would be Dow Chemicals. This is not the most highest momentum chemical stock out there. There are others, but in terms of the familiarity or the big name, Dow is definitely the biggest, right? Dow Chemicals. And a lot of chemical stocks are doing well, as shows you that there is a sector trend or a sector momentum that's going on, and that tailwind can help some of these stocks like Dow. Okay, so this is my first pick for this week. And then the second one would be Mercer International. This is not to be confused with the Mercer that does asset management. This Mercer International is a pulp company, make paper, as well as wood products. Okay, so this is also related to commodities. So no choice, right? In these few weeks, you will see me talking a lot about commodity related stocks because that's where the momentum is, right? And this Mercer seems like coming off a good bounce. Okay, like similarly last week or so, we were looking at what was that company? Just slipped my mind, right? So you can just watch a previous video, you'll know what I'm trying to say, right? When they are close to the moving average and then there's a bounce, that becomes a very good risk-reward ratio entry point, right? So this is Mercer International. And then the last one is this Berkley. It's an insurance company. And this is one of the rare ones. Okay, the reason why I want to choose this is not that it has the strongest momentum. The reason was because there were very few stocks that are outside the sectors that are commodity related or shipping related. I just found this rare insurance company that's among the higher momentum stocks out there. And I thought that, right, might as well, right? We throw in some diversity, throw in some diversification inside the selection. So this is Berkley Corporation, right? So the 3 ideas: Dow, Mercer International, and Berkley. Okay, so we'll see next week how this will perform and how the market will react. Generally, the bear is still in control. As I share with you, in the US or even in the Chinese market, the sectors only energy is the strongest one. And we already covered quite a number of energy stocks in the past 2 weeks, so I'm not going to repeat. So this week, I'm talking about Dow, Mercer, as well as Berkley. So hope you like this video. Give me a thumbs up and remember to subscribe to this channel so that when I publish the next video to give you a market trends update, you will receive the alert. Thank you very much, and I'll see you around. Goodbye.